All right, Bailey, thank you for joining me today. Really excited to have you on. Been a while since we last connected, but for those who don't know you, please introduce yourself to our audience.
Yeah. I'm Bailey Neal. I'm from Nashville, Tennessee. I graduated SMU in 2009, and then got my master's there in 2010. Wound up moving back to Nashville in 2012. I went to work for my family in insurance, and then over time, I started a couple of side businesses that turned into real businesses, and that's what I do today. And today, I'm a home builder here in Nashville.
Love it. There seems to be so many entrepreneurs who came through SMU. I'm sure you can rattle off a ton that you had
Yeah.
classes with and know well. Something I always ask in a topic in these conversations, what is it about SMU that leads to such an entrepreneurial alumni base and that kind of piggybacks into success, right? You hear of so many of these companies that do survive, maybe against the statistics of what you hear about business startups.
Yeah, that's a great question. Because yes, SMU, I've told parents of folks whose kids are maybe in high school that kind of ask me about the experience, and I was like, I don't know. Sometimes I'm not even sure what's in the water, but there is a
Right.
very much an entrepreneurial spirit. I'll say for me, SMU was actually the only school I applied to, and so much of it was because it had a top-notch undergrad business school. Most places you have to go to grad school to get the true
Uh-huh.
business, and
Uh-huh.
so for me, that was knew going in that's what I wanted, and so it was really important. And I think the thing that when you're there that I think was stressed over. I had peers who or buddies who went to, just different schools. They didn't
Uh-huh.
emphasize like internships and networking while you're in school.
Mm.
I had a bunch of buddies who would go, say, work construction, and nothing wrong necessarily with that, but it didn't necessarily teach you that you really need to start your career earlier and get into it and learn something about it. Um, so you're almost like coming out a couple years a little bit ahead in your understanding of the world. So somewhere in there, I think.
Yeah, no, I think you touch on absolutely. I think part of that is just the location of where SMU is, right? It's
Right.
a
Yeah.
college city in a massive town where no matter what your interest level is, if you want to be in banking, you want to be in, finance to real estate, there's an opportunity for you to get that within the college
Yeah. I
town
mean,
you're in.
you know, Dallas is a world-class business city. I mean, it just is a naturally diverse, obviously, oil and gas forever, but now so much telecom and other stuff that you can really do almost anything. And so I think that's like the fact that SMU is there is like Dallas has to have a top-notch business school. It just kind of does. And so I think that kind of breeds itself into it.
And so one of the other pieces is when we went there, there's a pretty diverse alumni base, right? And student base. Like
Yeah.
you were obviously from Nashville, there's a good Nashville pipeline, and we'll kind of talk about how you knew about the school. But I think there's something too that you were in class or in your fraternity, there was kids from Connecticut, California, and you kind of learned a little bit from like what their families did and their experiences, right?
Yeah, for sure. And I actually, that was probably one of my best takeaways from SMU leaving was that again, I had a lot of buddies who went to same kind of thing. There were 6 guys from my high school class that went to SMU,
Yep.
and yes, several of us are still very, very close. Not all of us,
Mhm.
but we branched out far more than some of our peers from high school who went to colleges with again 4 or 5 guys, and they really, in our opinion, almost made no new friends.
Right.
It's great, but it really doesn't broaden your horizon, and so I think you just get to see so many different things and that actually is, in my opinion, somewhat motivating. You see, like, what somebody else's family did that's interesting and fascinating, and it just
Yeah.
it creates some drive.
Yeah, not only you can recreate that anywhere other than uh, a four-year university where you kind of leave your hometown and
Yeah.
get what SMU offers. So back to your story, you mentioned coming to SMU with 4 or 5 guys. You knew SMU was one of the places you wanted to go. What did you know about SMU in high school? What
Yeah.
was made it so attainable and something you wanted to be a part of
Yeah.
to
I didn't
apply?
know, honestly, anything about SMU until my junior year of high school, and I wound up being, it goes a little further back. I actually had a guy when I was a freshman who was a senior in high school who went to SMU, And I just, that's all I knew, that he was going to go to
Yeah.
SMU. But then when I got to be a junior and started looking around, I knew, like I said, I really wanted an undergrad business school somewhere. I was not convinced that I really wanted to leave, go to work, come back for an MBA, take a couple years. I just kind of felt like I wanted to get as much business in undergrad as I could. I also came from a small private school, so I wanted a school that was, you know, not tiny, but also wasn't probably the big state school was probably not going to be right for me either. And I personally wanted to get a plane ride away from home. I didn't
Yeah.
want my whole family. I'm from Nashville. My whole family went to University of Tennessee, so that's like a 2.5 hour drive, and they would be up there every single weekend if
Yep.
I had gone in state. And I wanted a period of my life where I knew I would always come back to Nashville, so I wanted a period in my life where I lived in kind of a bigger city, um, probably shared still some, like, core values, more Southern
Right.
core values, than maybe a big coastal city, and so for all those reasons, it was like, and then you go down and you visit SMU and you're like, "Okay, right, this is pretty nice," right? There's a beautiful campus, great part of town, and you start to see like, "Okay, this is pretty awesome," and then so I did early decision, and so it wound up being the only school I applied to.
Love it. You mentioned having some good foresight going into it. What you'd mentioned, kind of teased earlier, you had a family business. So what were you like in school? Was it you wanted to go in business, you want to go to Cox degree? Did
Yeah.
you want to always know you wanted to potentially go work for the family and take that over? And that's how you approach school? Was it, hey, I want to get as far away from this and build my own thing in those 4 years to have?
Yeah. So I think so when I was like, let's call it early high school, I was kind of maybe one of these slightly weird kids who like read business books when I was like
Yeah.
young. I
Nice.
just always, I sometimes in the morning would watch flip between ESPN and Bloomberg in the morning. I just was fascinated by it. I don't, somewhere along the way, I guess my family, both my grandfathers started their own businesses. And so
Hmm.
I saw this idea that really, I thought to be successful and provide for your family and all the things that you need to do, like somewhere in running a business was the way to achieve that. And so from a
Hmm.
very young age, I really felt like I needed to running a business was the key. I was probably a little more indifferent to what kind of business that was. And so at first, I didn't necessarily think I was going to fall in love with insurance, and I was
Hmm.
probably a little resistive. But then as I came through college, I started to see like actually insurance is going to be one of those industries where not a ton of people go into it, which means over time there'll be a talent disparity, and I might be able to be successful there because the competition will be a little less. And so the
Yeah.
idea of running my family's insurance agency started to appeal to me. Um, I knew that I needed kind of like the foundation of business. So I got a undergrad in finance and a master's in accounting there. And then my first job was actually working for Travelers Insurance there in
Okay.
Dallas. Um, and so I did that for 2 years before my dad asked if I was ready to come back and start working with them. And when I did, when I went back, they gave me an opportunity to be kind of entrepreneurial. They were predominantly a commercial insurance agency, construction. And so they had this big client base that they did not sell any personal insurance to. And
Mhm.
so I saw that as an opportunity. And so I hired a couple of salespeople and I grew that and built it into something. And um, it was really a side hustle that kind of came into the picture that became my probably true first business
Yeah,
love, and we can get into that more.
for sure. So you kind of always had this vision of running your own business, right? You saw your grandfather do
Yeah,
it, you saw your father running a business, and you knew that was kind of the end goal, right?
yeah,
As we kind of fade in or transition into what it is you ended up building with Legacy South and are building to this day, I told you I was gonna make you stop and talk a little bit about the insurance world, right? I think that's
sure,
something
yeah,
you know, and you grew up in it and something I
yeah,
work in. It's an industry that's a part of so many pieces of the business puzzle, but kind of
yeah,
maybe for those graduates listening, what do you like about it? Where do you see as a gap in talent, and what people who are considering insurance, commercial insurance or personal line insurance should think about
yeah,
when maybe those jobs are presented themselves in recruiting days?
yeah, for sure. Yeah, so there's a lot there. So, um, It's a pretty good foundational. You get to see a lot. One, you get to learn about the businesses that you're working to insure. So you have to kind of
Uh-huh.
understand those, almost like a banker. Like a banker can't really help you if he doesn't understand your business too.
Uh-huh. Uh-huh.
So you have that. Then the big one I think hidden in there is insurance is the sale of a contract, an obligation. And so what you really figure out while you may not be a lawyer is you figure out how to read contracts and you understand what really matters in a
Uh-huh.
contract. And so what I do today, real estate is like all contracting, right? It's buying land, contract risk, raising money, contract and risk, subcontracting and hiring contractors, contract and risk, right? So it's all risk management. So I think it's very foundational, kind of like being a CPA is could be a foundational to doing something else.
Uh-huh.
And then as I kind of mentioned, I think insurance is just one of those industries where there's a bit of a talent gap. I think for a variety of reasons, not enough people are going into it. And I think anytime there's a talent gap, there's an opportunity for you to really make your own way and be successful, where people aren't as. And it's an industry, it's not going away ever, right? Like we're in a time where risk is increasing for across the spectrum. And so, it's a good place to be. You're needed by people.
Yeah, no, I appreciate you kinda touching on that a little bit for those listening, but then,
Yeah.
from all the things you mentioned, you have a potential career in insurance, you have
Yep.
a business that you could potentially see yourself leading, and we were talking beforehand of you saying how much you love what you do. So, obviously,
Yeah.
something kept kinda pulling you to another startup or an idea.
Yeah.
And I know family business is really hard, right? And there's probably
Yeah.
pressures of saying, I gotta stay in this forever. It's part of, our family and I have a responsibility there. Tell us a little bit about how you started the idea of Legacy South,
Yeah.
and kind of when you knew that was gonna be something that you were willing to step away from the family business and kind of go all in on.
Yeah. So it really started actually while I was still in Dallas. So like I said, I graduated from my master's program in 10. And so we're in the Great Recession, right? There's
Mhm.
foreclosures. And I had a fraternity brother who had been selling real estate while we were in college and leasing. He was doing all of our leasing. And so
Is
he and
this a
I
Sam
decided
Sawyer shout out?
this is a Sam Story story. So he might be one of our famous SMU alum, but
Yeah.
he and I got this idea we were going to start flipping houses. And so we found this condo right across from campus on University that had been foreclosed for, and we got it under contract for $63,000. This two-bedroom
Wow.
condo at right next to SMU, and then we had another fraternity brother whose dad had a bank in Little Rock, and we were like, and he had gone to work for his dad, and we called him up. We're like, "Hey, you think you'd give us a loan to do this?" And he wound
Yeah.
up giving us 100% loan to cost loan to fix and flip this condo.
Wow.
And we were like, this seems like why are you doing it at 100%? He's like,
Yeah.
well, this is right next to SMU. He had also gone to SMU, so he's like, I just
Yeah.
know that this thing we won't lose money. We'll be
Yeah, yeah,
fine.
yeah.
And so he did, and we each made like
Some
let's
cash,
call it
yeah.
$15,000, and
Yeah.
it was like all the money in the world, right? You've just graduated college, like you're like, oh, we're well on our
Yeah.
way, and so we
Right.
did that, and that was a great intro. But what I found in that is I liked the tangible nature of like
Uh-huh.
fixing something, building something, and we're in the recession, so the idea that like we could rent it out, we could do something with it.
Yeah.
Just resonated with me. I always knew that whatever I did, I'd want to invest in stuff. And so I really set out thinking this will be my investing more so
Mm.
than it will be a job at some point. And so I ended up moving back to Nashville. I started kind of flipping houses there. I wound up being on this hunting trip with one of my uncle's insurance clients, actually, and my dad and a couple other guys. And we just got to talking, and he was a general contractor in Nashville, pretty successful. And I was telling him I was flipping houses and he was like, "Oh, that's really cool. My son's worked for me for like the last 10 years. He up and quit a couple months ago and thinks he wants to flip houses. You think we can come look at the one you're
Yeah.
working on?" And so he did. Like 2 weeks later, they came by and we're going through it, and he's just started ripping the house to shreds. He was like, "Are you not going to fix that?" And I was like,
Yeah.
I mean, yeah, I'm
Yeah,
definitely gonna
yeah,
fix it."
yeah.
And so it was like and then so I started asking him questions like, "Well, what's your plan? How are you going to find one? How are you going to
Yeah,
finance it?" And he kind of looked at me like a deer in the headlights, and the light bulb
yeah,
just went off. Like we have completely complementary skill sets, so like let's do this together. We didn't know each other, but we knew families, and so
yeah.
that was good. And so I've done stuff with friends very directly, and that can be kind of challenging. And so this was perfect. And so we did that in 2014, and we were just going to flip houses. And so for a year and a half, we did that. And then the foreclosures kind of finally ran out. And so we decided to start
Mm,
building new homes in Nashville. And after our first one, we made like more than we had made in all the flips combined, and it
wow.
was far easier. And so we just were like, okay, here's what we're going to do going forward. And so we started kind of deal by deal, building spec houses with some investors. And then,
So how different is that world from buying a house that's standing that obviously just needs maybe a wide range of complete improvements to some touch
yeah,
ups, then saying, okay, here's a blank canvas piece of land. Let's
yeah,
build a single home. And is it economical to build one home, or are you guys building like, hey, let's build 5 homes on this lot to get a little bit
yeah.
more squeeze?
So we started off building two typically.
Mhm.
I would say, um, in some regards, far less risky to build new than
Mm.
remodel. So in the foreclosure times, you're taking a lot of risks because a lot of times you couldn't get into the properties before you bought it. So you're trying to
Ooh,
like look through the windows or, maybe
yeah.
get in somehow,
Right,
right? Like,
right, right.
but it's hard to know what the real issues are until you own it. And
Totally.
so now your upside is better if you get it right. Your downside's worse if you get it wrong. It's just a whole lot easier to know the quantifiable risks going in. And the time frame is actually less, oddly. The job size is too small for remodel, and so it's hard to get qualified partners, like subcontractors, to
Mm.
help you.
Okay.
So we figured out pretty quickly new was going to be
The way to
way
go.
better. Yeah, so we started doing that. Again, it was just like, okay, well, now I may have found a real deal side hustle that I can keep selling insurance, take my excess and
Yep.
invest. But around coming in like 2016, we'd built like enough of a backlog that it was like I had at that point 4 employees plus my partner. It was like I started finding that I was spending all my time not doing my insurance job.
Right, right.
I could tell that my dad was starting to catch on to that. And I was feeling guilty about it too.
Mhm, and how many
And
homes
what
had you guys built in that 2-year span?
So I think the first year we built new, in 15 we did 2, and then in 16 we had built enough of a pipeline to get up to like 30. So it was like pretty
Wow.
fast.
Yeah.
Now they weren't all going, but we had built enough of a backlog that I could tell.
Right.
And we found our first townhome project that I knew that if I could get that townhome project financed, there would be enough income from the fees we could generate from the investors to support my salary
Okay.
finally too. We had just been supporting everybody else's and reinvesting till that point. And so it was like if I had
And the
runway,
economics of on the economics of that, it's as you're thinking about this, right, you're weighing your job versus
uh-huh.
startup,
Yeah.
the fees from your investors of kind of the acquisition fees, some of the, scraping
Yeah.
together, that's the bare minimum. The true paydays when you ultimately
Yeah.
sell the home and then you're able to kinda redistribute
Yeah.
the funds to provide for your life and then a little bit back into the business or
Yeah.
vice versa.
S- So when I left insurance full time, I took a 50% pay cut,
Yeah.
at least, to go do it full time. But I knew look, I was like 20 at the time, 27, I guess, 27,
Mhm.
28. I was I didn't have I was not married, didn't have a girlfriend. I had a
Mhm.
home that I'd bought, 5 or 6 years earlier, and I had a very cheap
Yeah.
mortgage. I was like,
Yep.
if I'm ever gonna take this big of a gamble, like now's the time. And so I just decided like, hey, I'm gonna plow in now. Where I have low risk, not a lot to lose really.
Mhm.
Um, I could always go do something if it didn't work out. And so I was like, look, I
Yeah.
just need to pay myself to survive for a couple years, and then I'm gonna reinvest everything that we make back in this business. And then at some point it'll pay what I want it to pay.
Yeah.
And so that was kind of the philosophy. So I had enough. I basically had like somewhere around 18 months of runway. So I knew I would have time to backfill and continue
Yep.
to keep
Yep.
the pipeline rolling. So it was really signing up our first, like, it was like 20 townhome units.
Wow.
when I got the investor and the loan approved, that was like, all right, let's do this. And so beginning of 2017, I left full time to do it. And yeah, went from there.
So where were you guys now that you're getting more and more, you know, all in with this? Do you guys have kind of a map of Tennessee, Nashville that you're looking to build these in? Like, what category are we looking in? How competitive is
Yeah.
the landscape? Like, scaling from 2 houses to a 30 home pipeline that I think probably
Yeah.
just continues to grow. How are you guys kinda now taking your business mind and creating that business
Yeah.
plan?
So being a product of the Great Recession, the whole theme there was like the housing crisis, right? And so home building was perceived as a highly risky business. And I'm not saying it's not still got a lot of that, but
Right.
it was like, all right, if I'm going to do this, how do I protect myself the best? You got to remember, I started in insurance, so thinking risk here
Yeah.
was like the number one thing is you don't go compete head to head with publicly traded home builders who
Mm.
they don't have the same requirements we do. So where we started was we did urban Nashville, kind of in the urban core, because those public home builders won't come in and do a house, right? They're only looking to
Right.
do a subdivision that's 200 or 300 homes in our market. And
Mhm.
so it was like, let's carve a niche where we'll go in and we'll tear down one house and we'll build back two. We call it infill,
Yeah.
and so we started doing that. And there's probably 300 builders who will do that this year in our county. So
Yeah.
it was like you're competing a bunch of just people like us, and we felt like
Yeah.
okay, we can compete there. We're not going to go compete against like multi-billion-dollar corporations out of the
Right.
gate. So that was a lot of our initial thesis.
And how has that evolved from 2017 when you guys had a 30 home pipeline,
Yeah,
strategy to, almost 10 years later? What are you guys
yeah,
doing? What are some of the big kind of light bulb moments, that
yeah.
kind of evolved?
So as you get going, in our biggest year, we did like 75, what we called like a scatter lot infill homes. And what you figure out that is very hard to scale because that means you need a large number of people because the number of homes that a superintendent can manage is pretty few because he's got to drive around
Mhm.
town to find them.
Right, right, right.
And so you start to realize it's not terribly scalable. And so you start looking at doing, for all intents and purposes, subdivisions or
Yeah,
developments. And
yeah.
so, like I said, we did a townhome, and so we kind of saw that that was the writing on the wall was that we needed to start to move the deal sizes up, so you could go get some scale. So when you do let's call it a 50 home subdivision, we might be in there for 2 years straight. And therefore we can staff somebody to build it. We can staff somebody to sell it. It just becomes a whole
Mm,
lot more streamlined and you get better purchasing power. And so we could tell that that was going to be the route. The problem is that takes a lot of money,
yeah.
money that I did not have. And so it was actually an SMU connection again, that was really the catapult that we needed. So in 2019, I got connected with an alumni named Matt Rooney. He's with Trigate Capital, which is in Dallas. They're
Mhm.
a pretty large but middle market private equity fund. Anyway, he was covering the Nashville market, and he was just told to connect with me just through some mutual friends as covering the market. And we were sitting at lunch. I was kind of telling him what we were doing the first time around. He's like, it's not really our thing. We kept the relationship going. A couple months later, go by, back again, touching base. And he was like, kind of been kicking this around. If you could put together 3 or 4 into one package, one by itself is too small. But if you could get to 3 or 4, we can get a big enough check size that I think we might be interested. So that was the light bulb moment because I had raising money deal by deal from friends and family or high net, that is a full-time job. That is
Yeah,
hard. That comes with also more social risk. And putting your friends and family's money to work. If you get it wrong,
yep,
that's
yep.
hard. Um, and so I really kind of gravitated towards like this idea of finding a private equity partner. It's just a more professional experience. It's now it comes with tougher restrictions, more,
Totally.
but I actually felt like that would make us better
Mm,
earlier. I felt like if we could elevate to meet the expectation of an institutional capital partner, that in the long run, it would be worth any kind of proverbial tax that we might pay and learning, we would just get way better, and we'd be at some point be better able to raise more money. And so we signed up this partnership in 2019, in like November of 2019, and then 90 days later, COVID hit us straight in the face.
Right. Right.
But that was also, wound up being a good
Yeah.
learning experience, and we worked through that. But it was
So
really that.
how big are those communities that kind of are what home size is what we should think about that kind of allows the
Yeah,
institutional investor to be more a
yeah,
partner than maybe what they were before?
yeah. So the typical deal size would be somewhere between individual deal, let's say between 50 and 100 at that vintage
Okay.
of developments we did. So if you package four of them together, really the goal was not so many units, it was really how much capital can we deploy. And
Mm.
it was like 20 million was kind of the number that they didn't have to guarantee 20 million, but we needed a shot to get to kind of 20 million.
Right, right,
Um, and so you know, now 20 plus leverage. So, and home building is a little different than other real estate. You recycle the capital. You don't go build the whole project in one go. You build at the
right,
pace that you're going to sell.
right.
Um, and so you don't need quite as much capital for it. So,
Mm.
um, but anyways, about 20 million was the goal that
Okay.
they needed to be able to get out.
So you have this new partner, COVID happens. What was the COVID story for Legacy South?
Yeah. So not only did Nashville have cope, so it was like burned into my memory, but March
Yeah.
12th was what I think of as like D-Day for COVID. That was like the NBA All-Star game was canceled.
Mhm,
Air
mhm.
Airbnb like canceled all their bookings worldwide on that day. It was like COVID is
Jeez.
real. We're going to lockdowns. Well, 1 week before that, we had a tornado in Nashville that destroyed a decent section of the city. And so
Mm.
we actually thought that once COVID hit, I mean, honestly, who would buy a home in the middle of a pandemic with people starting to get laid off at real
Yeah,
clips? And if we're locked up for 6 months, like no one's going to be employed, who's going to buy a house? So we were a little bit panicked. Fortunately, we had not started building so much because was only 90 days. So we could kind of
yeah,
pause that. But we thought, again, how are we going to survive if we can't build and earn our fees for building these homes? Um, so what we did was we went out and we straight hustled and we got a bunch of tornado cleanup work and remodels and build
oh,
backs.
wow.
Um, the problem wound up being that to get the insurance time settled, to get people's architecture figured out, to get their lots cleared was actually you couldn't do that very quickly or as quickly as we had hoped. And so we spent like 60 days getting a bunch of work only to realize that work wasn't going to start for like another 60 or 90 days.
Yeah,
And we worked through it, and then right in that time, the housing market starts to come back because it's not as bad as we all think, and interest rates drop. And so when the interest rates dropped, everything became very affordable for everybody, and so the housing market starts to heat up. And we've got this obligation now to do all these remodels while we have this
mhm,
obligation to build all these
yeah,
homes. And so that was rough, but most of the stuff is all learning experience. But
right.
so we did all that, and that's how we kind of got through COVID, and kind of got the home building business launched at the same time.
And when did homes start to get delivered post-COVID, kind of given all that timeline?
So it was really like the beginning of 21, I guess, is where,
Okay.
and so the big run up year in housing was 2021. It was late
Yep.
20, but it was really 21 was the year. So
So you survived some massive headwinds that COVID provides, and you kind of have to
yeah,
scramble and get scrappy. That turns out to maybe have some fortunate impacts as a home
yeah,
builder. Besides the Trigate story, what else kind of was a light bulb or a moment that you kind of felt like, hey, being a home builder at scale is the right fit for me from personality, interest, and kind of business acumen that you knew, hey, I'm
yeah,
I'm I'm happy with this decision and I'm still more all in than I ever was.
yeah. I tell people that I don't know if it's the best term for it, but I think home building is like a pretty just classic, straightforward business. It is
Yeah.
now. It is like you have to block and tackle, run the X's and O's right to be successful. Like a lot of industries, it's consolidating to public home builders or gaining a ton of
Mhm,
market share. So you
mhm.
have to be well run, but it's like, it's sales and marketing, it's design and product, it's operations, finance. It's like all the pieces. And I just, because of this desire to be really entrepreneurial, that's what I love about business is just like getting to work on all the different things. And so
Mhm.
just like a classic straightforward business. It's not rocket science, but it's not easy either. It's just you have to execute. There's a long time between a decision you make today. You're not going to know if you're right or wrong for maybe 3 or 4 years. And so that can be a little bit hard about it, but it constantly makes you think about what's the state of the world, what's the state of the economy,
Mhm.
where are we going to be in a couple of years. And so there's this like forecasting and prognosticating that kind of goes on.
Um,
So I love all of that, but I'd say maybe the one piece that is probably above the rest is what I'll call like product, which is, creating a house plan, creating an elevation, creating a floor plan that truly is like, I call it like building a car, right? Like it's all the
yeah.
functions, um, and, or, it's not an iPhone or an iPad or anything that cool, but it is, you think about it somewhat the same way. And so I really like that piece.
Yeah, I mean, think about all the time we spend in our homes, and we don't even
Yeah,
know what goes into the components of putting it together, but it's such an
that's
important
right.
part
Yeah.
of human
Yeah.
life. No, I
That's,
imagine it's a fascinating ride every day.
yeah.
What can you tell us about post-COVID to now, some of the stats and what you guys have done, number of homes,
Yeah.
employees, and kinda what the future holds and what you'd like to see? As we know, given what you've told us, the entrepreneurial mind doesn't stop. You got some big
Yeah.
plans, I imagine.
Yeah. So right before the Trigate, in 2019, I think we built 95 homes that year.
Mhm.
So pretty decent size. Our biggest year was 22, built just over 400 homes.
Oh my god.
Um, Now, of that 400, it was about half for sale and about half rental homes. So there was a period when interest rates really dropped that rentals, from an investor's perspective, became very attractive.
Mhm.
That has since changed since interest rates have moved back up. And so we've kind of lost that portion of our business temporarily. Um, we also actually wound up recapitalizing the whole business in 22. And so it's changed the way it works a little bit. So this year will be somewhere in the mid 200s, but all for sale.
Mhm.
Um, and we kind of have a couple year growth pattern of trying to effectively double that. So
Amazing. That's incredible. Well, it's been amazing to watch you kind of live out your dream here and taking it from what you once thought of. Hey, what's my business going to be? You found it early,
yeah,
and you got a big runway to continue to grow it. Any macro trends or some of that forecasting about where homes are and kind of what we need to see as an economy to? I mean, you're in one of the hottest markets in growing states. What are some
yeah.
things that those either new home owners or other home builders should be thinking about, or even just us as civilians need to know about the home market that
Yeah.
could impact us here in the future?
So we're a very interest rate sensitive
Hmm.
business. The price of the house is really a reflection on what's the interest rate. It's what is that mortgage payment really for the house? And so, you've seen house prices, especially new home prices, come back a fair amount, probably most of the country north of 10%
Hmm.
um, on an effective basis. So, yeah, the question, the billion, what, however, $1 trillion question probably for us all is like,
Hmm.
where interest rates in the next year or two? And I think I'm probably a little more in the camp that they're going to remain higher than I think everyone thinks. As of this recording, the Fed was in, now it's last week, like they're hinting that they're going to do a rate decrease. I'm not really sure that that's going to show up in your mortgage rate.
Yeah.
Um, in the near run. I think there's still some macro uncertainty and stuff that's going to keep longer term rates higher. So, there's that. That being said, if you're a buyer of a home, if you want to live, if you like the suburban lifestyle, like say Dallas, like if you can find a big home builder, now is the time to get a deal. They're going to give you
Hmm.
a screaming deal. You can get a 4.5% 30-year fixed rate mortgage because they'll pay for it for you. Um,
Mm.
and so if you're a buyer, now is the time. Now
Okay.
I'm not sure I see the market going much lower because supply is going to start to constrict.
Yep.
Um, and so, but the mortgages, if they continue to go up, you'll be in a good spot because they've bought your rate. And so you'll be able to get it pretty close. So, and I would do that like year end is also a great time because everyone's trying to get rid of inventory. So I think if you're a buyer, it's actually a really good time to be a buyer.
What about how have tariffs and those kind of things impact your business in the short term and then kind of long term? How do you view it?
Yeah. I th I think the impact to us, oddly, is gonna be relatively minimal. Um, there's a little bit of Canadian wood, but I do think there's, like, US capacity to kinda make it up with
Mhm.
we've just not seen anything there. There were already kinda decent tariffs on it already. For the rest of the components, the cost of shipping so much of what goes in a house is too cost prohibitive for it to come from overseas sometimes. Like, oddly, a lot of appliances are already made in the United States,
Mhm.
and so there's that. Windows, most of that's built here, so
Yeah.
lumber, you you can't afford to ship it from China, that it's really
Right.
mostly here anyway. So most of our stuff is there, so
Perfect.
fortunately, we will have probably minimal tariff impact.
Love it. Well, we appreciate you being the 1911 Group's home builder
Yeah,
correspondent. So
for
we'll make
sure.
sure to check in with you quarterly to get an update on when to buy, because that's the
Yeah,
audience is thinking about of where you can get a home between Nashville and Texas. It's tough, but Bailey, thank you again for jumping
for
on.
sure.
Thanks for giving us some time, and
Yeah,
we look forward to talking to you soon.
sounds good. Talk to you later.
Thank you to our incredible sponsors, Security National Bank, Hilltop Property Tax, Mignon Steakhouse, Sound of a Rose podcast, and the SMU Cox School of Business for making this all possible.